Hey, good morning. This is Vance out of the Seattle area. It's Wednesday, April 27th. This session will be about 15 minutes. I started a couple of minutes early because I see something developing that I want to watch over here on my right on the chart. But let's get to some fundamentals very quickly. In the news, the focus today is on FOMC, that's Fed data, and also rising oil. The Fed data will be out at 2 p.m. today. That's obviously going to cause a little bit of concern for investors. And also news yesterday was that oil inventories are lower than expected. So that has a tendency to increase the price because of a lower supply. But some of the talk out there is about the correlation between oil prices and jobs. I mean, obviously that discussion is always kind of out there, but it's kind of, well, this is actually attainable. And that number that they're looking at is about $50 a barrel. If it can get there, then a lot more companies can afford to do drilling and fracking, and this creates a lot of jobs. So when oil's low, it just doesn't make economic sense for companies to go after it. So I can see why many want oil prices to rise between $50 and $60 a barrel. It's not going to hurt consumers badly, but it will be more so a boost to the U.S. economy. So I think there's quite an effort to make that happen. Going back to the Fed data, the market doesn't have much in terms of expectations for a rate hike anytime soon. In fact, it's about a 1 in 5 chance in June. So they'll be watching for, any kind of surprise there. I don't think we'll get one. So investors will be watching for that. The name of the game for central bankers is stability. I think they're content to see the U.S. dollar get a little weaker anytime they can, and thereby not putting a drain on the euro or pound economies, which, since we're all interdependent, can hurt us. For the EU, the 146.50 is the top of the weekly range, and we're currently at around 11300, so 1300. Why so much emphasis on stability? They can't allow a crisis, a banking crisis, to emerge that would jeopardize the derivatives game, where the big banks are exposed to hundreds of trillions of dollars, basically in a house of cards that they juggle. But notice that the fundamentals right now in terms of the talk are all on the side of a weaker US dollar, which means EU charts up, GU charts up. Now, that's not saying that's what's going to happen, just saying the fundamentals that's the way they're leaning. And also recall that the exit of the UK from the Eurozone started to come into question late last week, giving the pound a boost. So again, fundamentals are slightly on the side, more than slightly. They're on the side of a weaker US dollar today. Now, sometimes the fundamentals are pointing up and the technicals are pointing down. What does that mean? It just means that you're a little bit more at risk. You'd ideally want those going in the same direction. Now, if the Fed came out with a surprise, like, we're fully intending on raising some rates in June, or we haven't left June out of the question, then all of a sudden, if the technicals are a little down and now the fundamentals shift to down, then boom, you get a hyper volatile move. So that's just the way it works. You just got to keep an eye on it. Okay, so before we go into price here, I'm watching something develop on the pound, but we'll come back to that. Let's go to the euro, and let's go back to yesterday real quick. If you were watching yesterday, let me get back there and zoom in on this section. If you were watching the session yesterday, you would have saw that I was watching as price came down to here. I was saying, hey, 38.2 is aggressive. The optimal target is right here where the buyers and sellers resolved at 50-50. You've only got, 3 pips between there and there. 50% is looking a little better with 8 possible. But then you got to check your relationship of your stop loss. Can you get your stop down below 76.4 if you take a 50% entry at a target of this 5-minute candle body close? And you couldn't quite get it there yesterday. It was close. So I said, go in at, if you're gonna be a little bit aggressive, at least wait for 61.8. target this area right here, get your stop below 76.4. So that one would have worked, although that was probably a 68% probability trade. The higher probability trade, which would have been, you know, maybe closer to 78%, is if you got in closer to 76.4, so you could target this optimal target here and put your stop down below this swing low, well below this range and 76.4. That might have been overkill. I mean, just having below this former territory here, which is where this line is, and having your entry near 76.4 could have worked out pretty well. Now, one of the things to keep in mind, and not a lot of traders know this, is when you start to get your stop very small, you basically run out of usable margin. For the pound, you know, at one time when we did all the math, the smallest stop loss we could run with, for example, was about 8 pips, because the smaller the stop loss, the more number of contracts you can trade, which eats up your usable margin and your available margin, and your you basically you run out of margin at a point in time. So it was about 8 pips a while back on the pound. So there is a limitation there, and also your spread gets factored in too when you start to look at smaller ranges. So another way to do this would have been to go with the stop, which is below 76.4, below this level. So that's good. Get in at a good price, and then just go for a little bump. That's a very high probability. If you were going from here to here, you're talking about a 90% probability. So no way is the right way. The way you end up doing this is really just based on your personality, and the market will fit all kinds of different personalities. Now the 5-minute candle ticked over and moved my chart, but that's okay. I was kind of done with that. So let's now take a look. Zip over the pound. Okay, it's not doing anything. All right, let's go out to 30-minute. We always want to start there and look at the flow of money. Right now, the flow of money that was to the top side, and it's kind of flirting with even, but a little to the top side again with the euro. Now you can see I've defined an important level right here. This shows you over a 30-minute period, which is hundreds of billions of dollars changing hands, or at least 50 to 60. This shows you in a 30-minute period where buyers and sellers resolved at 50-50. So this is not a trend line. It's not any of the cute things you read in books. And you notice here is they come up a second time. The sellers are a little bit stronger, and that price in a 30-minute period resolves a little bit lower. And so you'll find over and over again, if you have this knowledge, you'll see that there'll be a lot of selling interest right here. And so flipping that around and saying, hey, how can we use that for buyers? You'd be looking for a change on the 5-minute chart. So remember, fundamentals are up, and we like to go in that direction. So if we pop over to the 5-minute and we watch that top line, you can see, and I could probably tweak this just a little bit. I'm going to leave that there because I see very choppy, but I see this line coming in right at the 5-minute. Could move that up just a tad. No, I like it right there. So what we'd be looking for is a 5-minute candle close. So resolution of 5-minute period of billions of dollars changing hands where there was a change. A change from what? A change from all of this time. A change from going all the way back to yesterday. So a close above this would be a change. That has not happened. One doesn't matter. That's a fluke. But that would be a change. That would show that probably the buyers just gained a pretty significant advantage. And when that happens, we can look at it. Down here on the bottom, I guess we're going to go back to 30-minute for a moment. You can see I've got kind of a reconciliation line. This 30-minute period again, here. You can see that the buyers are getting stronger, and that would explain why we're seeing the buying interest here, of course. But on the flip side again, what would we be looking for? Well, a close below this level. This is a demand line based upon these two TD points. I would probably want to see, I mean, there's going to be buying interest at this level, just to show you. There's going to be some buying interest here a little bit. So, this will be a struggle. The price is going to struggle. So that's why I don't like the euro to the downside. There's going to be buy orders here. There's going to be buy orders here. How do I know that? Just from 12 years of experience. You'll see it. You'll get to, if you just keep practicing, you'll see it. Okay, so let's go over the pound. pound's a little more interesting. As you can see, I've got a bit of a TD line on the top here. I call them supply lines, which supply is about sellers. That's where the sellers are located. And we could drop this down and say, hey, oh, thank you. Let me get the line. Say, hey, this is where they reconciled in a 30-minute period. I like this one better. On the bottom side, now look at this. You've got a TD line here, and you only use TD lines if price is in a range. So, for example, you would never draw a TD line from here to here because price is trending here. TD lines are only helpful when price is in a range because it's measuring that struggle between the buyers and sellers. Here, it's just trending. So here we do have a bit of a range right here, and you can see that's defined by this. You see we get a close down here. You also see I have a horizontal line here showing that really strong level of demand right in here. This is where the buyers are, and a little bit early because this is so obvious. And so when we get a close down here, we really can't make a move and say, hey, something big has changed. The change is right here. If we get a close below this one, that's a change. So when it comes out of here, we're saying, sellers might have a little something. Let's see what happens in the next segment. Now, in the next segment, we be looking for basically price to resolve just under here. But we'd also be watching for, hey, man, can the buyers push this back up into here and invalidate this move? In other words, if the sellers make a move out of here and then the buyers get back in, it basically cancels each other out. You know, and there's no symbolic reason for that. It's just real. The sellers got it out, the buyers got it back in. Simple as that. Nothing more to it. So we'll be watching that. I won't be here when this candle closes. We're going to get out of here in about 4 or 5 minutes. But it would have got my attention here. That's why I started the session a little bit early. I thought, oh, we got something happening here. It could drop and close here, and then we end up with a trade, right? That didn't happen. All right, so, and also as you're looking, don't lose sight of the fact that some really important Fed data is coming out at 2 p.m. today. You know, it's not the big event where everybody's focused on it and concerned, but it's still, you know, it's still got the potential, even though the potential is small, of being a surprise. Okay, so let's go down to the 5 minute and show you what I'd be looking for. I wouldn't worry about this. Wow, that's a little bit choppy, more than I would have anticipated. So I would move this, now that I see this here, I would move this down to, wow, I do not like how choppy that is right there. But I'm going to go with this. So I'd want to see a 5 minute candle close below this. And then you know, you don't want a long tail here showing massive buyer interest. Like, you don't want this. You don't want to see this. See what happens after you get this? Boom, right? You don't want that. You want a solid candle close, and preferably, and you know, this would be like, you know, kind of a wish list here. Get any little tiny close below here. But what happens is, because all of this is so obvious as you get more experience, is once it gets down in here, very often it just goes zoom, 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 zoom. And let me show you part of the reason for that. Part of the reason for that is, if you look at this trend up, let's use this line here, this trend up, and even this trend here, this is all part of the same kind of bigger money movement up. These guys that are in buy positions still are looking to get more money. And so they're in these positions. And if we put our fib on there, that's the last territory that the buyers took. You'll see the natural correction level 61.8, and then the final stand is 76.4. So I don't see a lot of stops here. I think you're still going to get buying interest in here. But if this happened to correlate with a 76.4, you would see rapid movement down here, because these buyers have stop orders, in this case sitting right. Let me get a different symbol there. These buyers right here have their stops sitting here. And so when it moves fast, you think, oh, there's a lot of selling. Well, actually, this is the buyer stop losses, which are sell orders getting hit. Well, you'll see this over and over again. So you got to take all that into consideration. If it sounds like a lot to do and you've been sold on the idea that you can use a few indicators and a little self-discipline and make a lot of money, that's just a lie. That's not true. You know, the most valuable skill in the world is also the most difficult, one of the most difficult skills in the world. You know, it's not, it's just like anything else. And, you know, it's good for the brokers to convince you that it's easy, but it's not. And so that brings me to my book. You know, it's free. You don't have to register. There's nothing to do. You just go to forexartofwar.com. That's this part right here, forexartofwar.com. And when you do, let me just go ahead and do that so I can show you where it's at. forexartofwar.com. Right here, you just click up in this big, long, ugly yellow banner, and you'll see it doesn't require email. You just got the book. This, I can tell you, is, in my opinion, the most valuable Forex trading book ever written. It's my 11 years of training and trading currency and all the techniques I developed. And really, it's I don't know, I tend to kind of stay away from this word, but it's a whole different level of consciousness. Anyway, that's there for you. Let me get back to put the charts up. So as you see, the sellers are pushing hard to get this under there. If they close it under, which looks like they might, then that would give us a stronger indication that we're going to head for this level. Now, look for a 5-minute close below this level, but know that you've got these buyers still kind of defending all the way to here before they give up. So, you know, this is just real factors. These are the things you got to know. Now, one of the reasons why it's so choppy is because, you know, we've had 2 days of central banker data and a little bit of uncertainty. We've got the oil market moving, you know, some money moving out of dollars and into oil and so on and so forth. One of the most important things that you can learn as a currency trader is to identify what your trade is and then develop the ability to wait for it. And when it comes, boom, you know. So that's about it. Got to get out of here right now, but let me bring up the system. Write to me, Vance Williams, that's my first and last name, at myself.com, Vance Williams at myself.com. I get that on my phone. If you have a question about Forex trading, you're reading my book, or you just want my take on something, just send me an email and I'll cover it on the morning session. Also, if it's a subject that, you know, I think is irrelevant or outside of the scope of what I do. For example, if you ask me, hey, Vance, you know, can you develop this skill and then trade other people's money? Not with what I teach you. I don't know how to trade other people's money. That's a different skill. I only know how to trade my own money. So that kind of gives you an example. But if you want to learn how to do this yourself, know exactly what it's going to take to do, you know, read my book. That's going to launch you miles down the road ahead of everybody. All right, you guys have a great day. I'll be back tomorrow morning at 9:30 a.m. Eastern. We'll see how this all shook out and also see if there's any opportunities. Take care. Bye.